Let's turn to another earnings story this morning. Barclays shares higher after delivering a profit beat. The CEO has just been speaking moments ago, saying the UK and the US are on track for a, quote, feather soft landing. That's a nice line. Let's bring in Bloomberg Intelligence senior banks analyst Philip Richards. Philip, good morning. So clearly Barclays will be hoping to make the most of that feather soft landing, if that's what we get. What have been the key drivers then? We saw an 18% rise in profits in the third quarter. What are the key drivers?
Yeah, hi. It's been across the board beat, I'd say, overall. Revenues are slightly better, costs are slightly lower than expected, obviously a positive, and loan loss charges also coming through lower. And it's been the UK bank which has really been the driver so far. And elsewhere it's pretty much in line. So yes, it's positive, but I wouldn't say it's outstanding. It's not a blowout sort of numbers.
NII guidance is up. Where's that coming from?
Well, it's coming from basically the margin holding up firmer than expected, and also volumes have been picking up in terms of those rates starting to come down. But that guidance was only for this year, 2024, and that's pretty much in the bag already. Consensus was already there. What we all care about is what about next year, about 25.
Absolutely.
And the bank were very quiet on that.
Right, and so on that NII story, it's interesting, isn't it? Because it's a bit like the US, where NII held up better than expected for certain banks. But also going into these numbers, I was reading that many analysts say that Barclays, actually I think they said it about Lloyds as well, has a structural hedge to the declining rates environment. So is this about Barclays specifically, or is this about UK banks?
It's UK banks, and that structural hedge will support them all in terms of the low impact on the NII, but also 2, 3, 4 years forward, can they maintain that revenue momentum? That's what's key for them. And Barclays have these big 2026 targets, and consensus is somewhat below those levels. So yes, this year's in the bag. First half next year is fine, but what about the second half next year into 26? Can they sustain that?
One of the standouts of the U.S., though, in that kind of hedge against the net interest income that Anna was talking about, was the fact that investment banking and some of the deal activity was surprising to the upside. Is Barclays getting in on any of that?
They are. They do see themselves as, the European competitor to the big US players. The US is a big bulge bracket, but corporates still want to have a European angle on that side. And actually done very well on that. Their fee income's up very strongly. They've beaten estimates on fixed income, on equities as well. So yes, overall pretty strong on that front.
It's a fascinating one as we talk about the capital markets activity and kind of coming back, maybe deploying some of a lot of those funds that are caught up in the PE space. Philip Richards over at Bloomberg Intelligence, we thank you so much for giving us that insight.